So there are many stocks that have recently corrected, and even more stocks that are currently now in a bear market, down 20% or more from their all-time highs. But one of the stocks that I own has been holding up pretty well throughout this whole volatility phase we've been experiencing the last month or so, and it's positioned, in my opinion, to have a very strong run in 2019. So any guesses as to what this company is? Pause this video and comment down below as to what your guess is. And here's a hint for you, because there's thousands of stocks out there. It's actually a Dow 30 stock. Hey, welcome back to the video, guys. If you're brand new to the channel or you're a brand new investor, make sure to subscribe down below to join this community. I pump out videos like this every single week, and if you enjoy this content, drop a huge like as well. So today, like I mentioned, we're going to be talking about a Dow 30 stock that did catch my attention earlier in 2018, earlier this year. And I have opened up a position in this company, and I have been adding shares to this position throughout 2018. It's a very stable blue chip company with strong growth and tons of potential ahead of it lying in 2019. This company is one that pretty much each and every one of us has had exposure to, especially when growing up. And we can remember this company, or we recognize this company, by its iconic, lovable cartoon mouse. Yes, the company I'm talking about is Disney. Now, short-term predictions is kind of anyone's guess. The stock could shoot up immensely in the next few months. The stock could shoot down immensely in the next few months. It could remain flat in the next few months. Anyone can make a guess on that. But what I'm saying is that I believe that Disney has positioned itself to be a very strong company in the next few years. And especially in 2019, for some reason that I'll be going over, I believe there will be some big catalysts which may have a pretty big impact on this stock. And in my opinion, in the next 2 to 3 years, I think Disney will be one of those stocks that investors will want to start flooding into again after we see how 2019 plays out. And this is why I'm really excited to go over this company with you guys today and show you what I see and the value that I see in Disney today. So let's break down some stats here on Disney by first looking at their latest earnings report. So we can see here that they actually reported their earnings in the last week or so, and it came in very strong. EPS was $1.48 versus $1.34 expected, and revenue was $14.31 billion versus $13.73 billion expected. So as we can see, we had very healthy beats here, beating analyst expectations, which shows us that the company is growing stably and consistently year over year. Comparing to the same period last year, our EPS had a growth of 38% and revenue had a growth of around 7.5%. And considering how large Disney is as a company, these are pretty impressive stats in my opinion. So breaking down these results even further to see how each segment of the company is doing, we can see here that they had healthy beats in all but one of their segments, which was the parks and resorts, but that still came in at a very slight miss, which was easily offset by the growth elsewhere in their different segments. This breakdown also shows us how strong their brand still is and how many revenue streams they have to take advantage of currently in 2018. And of course, some more good news came out during this earnings call, and that was surrounding their new streaming service, which they plan to launch in 2019. Now, this is going to be a major catalyst for this company next year, and it's a big reason as to why I'm investing in the company right now as well. But either way, during the earnings call, they did come out and they did give the service a name, the streaming service, and it's going to be called Disney Plus. And like I said, the good news here is that they're still on track for 2019 rollout. People were kind of skeptical on if they would push that out, but Disney has confirmed it is still on track. And they do plan to release this both in North America and Europe, so there will be some good exposure to the service when it is launched. And of course, eventually, as time progresses, they will roll this out worldwide so that you can have exposure to Disney Plus wherever you are in the world. So this, of course, is getting investors extremely excited because this could be seen as a true competitor to Netflix. Right now, Netflix does have a few competitors with Amazon and maybe even with Google, but there's no real threat, to be honest, when it comes to the content that Netflix has. But in 2019, Disney will be pulling a lot of their content, if not all their content, from Netflix, as well as producing some original content specifically for Disney Plus. And this will be a major growth driver, in my opinion, and in a lot of investors' opinion, for the company, because it'll attract millions upon millions of subscribers worldwide. At least that's the hope, and at least that's what the biggest catalyst is for the company next year. This also plays into my next point, which is that they recently completed their acquisition of Fox for $71.3 billion. And although this was a hefty price to pay, this was a good decision in the long run because it does strengthen their brand that much more. Because now that they own Fox, they also own massive brands like X-Men, Deadpool, Avatar, and even the Fantastic Four series. On top of this, you also have some other large name series like X-Files and Planet of the Apes, just to name a few. In fact, here's a screenshot from The Verge that shows us just exactly what Disney owns now that they've successfully acquired Fox, and there are some big names up in here. So I think that it's pretty safe to say that yes, in the short term, $71 billion is a hefty price to swallow, but over the long run, these brands will surely pay for themselves and bring in Disney hundreds of billions of dollars in revenue and profits. ESPN though still remains kind of a thorn in the side of Disney because they still continue to struggle with making a lot of profits from this platform. So as we can see from the quote here, results at ESPN were comparable to the prior year quarter as affiliate revenue growth was offset by higher programming and production costs, driven by contractual rate increases and lower advertising revenue. Lower advertising revenue was driven by a decrease in impressions due to lower average viewership and fewer units delivered. But what investors are seeing, even though there is a lot of negativity around ESPN, is that because of the naming convention for Disney Plus, they will merge the ESPN service and the Disney service, streaming service, together into one and provide even more value for people who look to subscribe to the service in 2019. Now, although this is not announced yet, this is something that investors will be waiting for to hear at the Disney Investors Conference that will be taking place sometime in April 2019. So as of today, Disney stock has gone up around 5.5% year to date, which is not bad considering a lot of stocks are down on the year and a lot of stocks have experienced a lot of volatility this year. But looking back here at the chart from 2019, we can see that the stock has actually been relatively flat and it's only up around 13% from that time. So this of course has been frustrating for a lot of investors when you saw other stocks like Netflix gain massively in the same time period. But now in 2018 going into 2019, we can see that there is some movement in the stock. We are trying to make new all-time highs and there is a lot of excitement coming back into Disney as a stock and as a company. Of course, a lot of this is driven by the streaming service because investors have seen how successful Netflix has been with their streaming service, and they expect Disney to replicate that success with their streaming service as well. So at this point, in my opinion, things are going pretty well for Disney, and the headwinds that they've experienced over the last, say, 4 or 5 years have finally passed, in my opinion. And as long as they keep on track with things that they've promised to deliver next year, I think that this stock will have no trouble making new all-time highs. So I'm sure at this point you guys are wondering what my stake is in this company, if any, and where it sits in my portfolio. So for the first time ever, I am going to disclose that yes, I am long on Disney. I do own a position in Disney. I do hold shares in Disney. So looking at the screenshot here, you can see exactly where it sits in my portfolio, and it's currently right around 5% or so of my overall portfolio worth. But I do want to keep adding more to this position as we continue going into 2019. And if we drop somewhere around $110 or even lower than $110 per share, you can almost bet that I'll be adding more Disney stock at that price. Now, if you wanted to see the remaining positions that I had up there, which I have not listed and I have not disclosed publicly, you can either join the Patreon page or join the VIP membership group. Both links will be in the description down below. And if you're a current Disney shareholder, let me know in the comment section down below what your stance is going into 2019 with this company. And on the flip side, if you're not an investor in Disney currently, what is the reason that you have not either made an investment so far or not considering making an investment in this company? At a current PE of around 17.5 and a forward PE of around 15.5 or so, I think that Disney is actually a very good value stock right now. And as you can see here, analysts are also severely underestimating the stock and the power of the brand, in my opinion. And when you look at their price targets here, I believe that they're yet to price in the acquisition of Fox and what that's going to do with the brand moving forward. And I also believe that there's a lot of fear priced into this estimate where they won't be successful in launching Disney Plus because of Netflix and the competition from Netflix, but only time will really tell how this plays out. If you want to see more information on tip ranks for this, I will leave a link in the description below, linking a Disney stock on tip ranks. You can go check that out. You can sign up for free and you can even look at other stocks that you may be interested in. So I'm bullish on this stock going into 2019, and I will continue to be unless Disney finds some way of messing up the Disney Plus launch. So in my opinion, this will be the biggest catalyst for Disney going into 2019, but they are also going to have some pretty massive blockbuster hits coming out next year, including live action Lion King and Aladdin, which in my opinion will be some pretty massive movies that bring in a lot of money for Disney. So even when looking at my lifestyle and how rarely I go to movie theaters, next year I most likely will be going to see both The Lion King and Aladdin in movie theaters, and I think a lot of other people, especially in my age group, will be doing the same because these are the kind of movies we grew up with and we want to kind of relive our childhood here, and I think this is exactly what Disney is hoping for. So in my opinion, all things considered, I think 2019 will be the best year for Disney ever. I hope you guys enjoyed this video. If you did, make sure to drop a like, make sure to subscribe as well. Make sure to comment down below as well on your thoughts on Disney, whether you're an investor, whether you're not an investor, you're bullish, bearish. Love to hear your thoughts. Don't forget to invest positively, guys, and I'll see you in the next one. Peace.